Berkshire Hathaway. The name sounds powerful today, like a mighty oak tree in the financial world. But this giant started as a tiny seed, a struggling textile company in New England. Founded in 1839, Berkshire Hathaway wove its business around cotton mills, a common industry at the time. For decades, it chugged along, making fabrics for shirts and sheets, but never achieving spectacular success. Little did anyone know that this quiet company held the potential to become something extraordinary. By the mid-20th century, the American textile industry faced tough times. Competition grew fierce, and profits dwindled. Berkshire Hathaway felt the pinch, its future uncertain. It seemed the company was destined to fade into obscurity, another casualty of a changing world. Then, in 1962, a young investor named Warren Buffett entered the scene. Buffett, already known for his sharp mind and knack for picking winning stocks, saw something others didn't in Berkshire. He recognized the company's underlying value, its strong management, and its potential for growth beyond textiles. Buffett began buying shares of Berkshire Hathaway, gradually increasing his stake in the company. This marked the beginning of a remarkable journey that would transform Berkshire from a fading textile mill into a global conglomerate. Little did anyone know at the time that this unassuming investor would become a legend, forever linked to the company's incredible rise. Warren Buffett, often called the Oracle of Omaha, brought a new vision to Berkshire Hathaway. Born and raised in Omaha, Nebraska, Buffett possessed an uncanny ability to understand businesses and their true worth. He wasn't interested in quick profits or flashy investments. Instead, he believed in the power of patience, long-term thinking, and investing in companies with solid fundamentals. Buffett's investment philosophy, rooted in the teachings of his mentor Benjamin Graham, centered on the concept of value investing. This approach involved identifying undervalued companies with strong earnings potential and holding on to those investments for the long haul. Buffett believed in buying good businesses at reasonable prices and letting them grow over time. Under Buffett's leadership, Berkshire Hathaway began to shift course. He recognized that the future of the company lay not in textiles, but in diversifying into other industries with greater growth potential. Buffett began using Berkshire's capital to acquire businesses in sectors like insurance, consumer goods, and media, gradually building a portfolio of companies known for their strong brands and consistent earnings. Buffett's strategy was not about chasing the latest trends or making risky bets. He preferred to invest in businesses he understood, companies with a moat around them, a competitive advantage that made them difficult to challenge. This approach, combined with his patient and disciplined investing style, would prove to be a winning formula for Berkshire Hathaway. And one of Buffett's early and most significant moves was to steer Berkshire Hathaway into the insurance industry. In 1967, Berkshire acquired National Indemnity Company, an insurer based in Omaha. This acquisition marked a turning point for Berkshire, laying the foundation for what would become a massive insurance and reinsurance empire. Buffett recognized the unique advantages insurance companies offered. They collected premiums up front, giving them a pool of money they could invest before having to pay out claims. This float provided Berkshire with a constant stream of capital to invest in other businesses, fueling the company's growth. Over the years, Berkshire Hathaway continued to expand its insurance operations, acquiring prominent names like Geico, General Re, and National Re. These acquisitions transformed Berkshire into a global insurance giant, with a reputation for financial strength and underwriting discipline. The steady stream of premiums from these insurance businesses provided Buffett with the financial firepower to pursue even larger acquisitions and investments in other industries. Berkshire Hathaway, under Buffett's guidance, became a conglomerate unlike any other. Instead of focusing on a single industry, Buffett assembled a diverse collection of businesses under the Berkshire umbrella. These companies spanned a wide range of sectors, from consumer goods and manufacturing to energy and transportation. Buffett's acquisition strategy was far from random. He looked for businesses with a few key characteristics: strong management teams, consistent earnings, and a durable competitive advantage. He preferred companies with a simple business model that he could easily understand. Buffett often said he wanted to invest in businesses so good that a fool could run them, because eventually one might. This eclectic mix of businesses, ranging from iconic brands like See's Candies and Dairy Queen, to industrial giants like Precision Cast Parts and Burlington Northern Santa Fe Railroad, created a unique synergy within Berkshire Hathaway. The companies operated independently but benefited from the financial strength and stability of the parent company. Buffett's hands-off management style allowed the CEOs of these subsidiaries to run their businesses autonomously, fostering a culture of entrepreneurship and long-term thinking. Section 5. The sweet taste of success, See's Candies. One of Buffett's most celebrated acquisitions was See's Candies, a beloved chocolatier based in California. In 1972, Berkshire Hathaway acquired See's for $25 million, a price that seemed steep at the time for a company with relatively small profits. However, Buffett saw something special in See's Candies. It was a brand with a loyal following, known for its high quality and nostalgic appeal. Buffett recognized the power of brands and their ability to command premium prices. He also understood that See's had significant pricing power, meaning it could raise prices without significantly impacting demand. The acquisition of See's Candies proved to be a masterstroke for Berkshire Hathaway. The candy company generated consistent profits year after year, becoming a cash cow for Berkshire. See's also provided a valuable lesson for Buffett about the importance of investing in businesses with a strong competitive advantage and the ability to generate recurring revenue. Section 6. Geico, a whale of an insurance investment. Another cornerstone of Berkshire Hathaway's success story is Geico, the auto insurer known for its quirky advertising and low rates. Buffett's history with Geico dates back to his early investing days when he first recognized the company's potential as a young business student. In 1951, Buffett purchased his first shares of Geico at the age of 20. Years later, in 1976, Berkshire Hathaway began acquiring large stakes in the insurer. By 1996, Berkshire had acquired complete ownership of Geico, making it one of the largest and most successful investments in Buffett's career. Geico's direct-to-consumer business model, its focus on cost efficiency and its use of technology to reach customers, made it a formidable player in the auto insurance industry. Buffett's long-term bet on Geico paid off handsomely, as the insurer grew to become a major contributor to Berkshire Hathaway's earnings, and a prime example of Buffett's ability to identify and capitalize on companies with a winning formula. Section 7. Coca-Cola, a sparkling addition to the portfolio. In the late 1980s, Berkshire Hathaway made a significant investment in the Coca-Cola company, acquiring a 6.3% stake in the beverage giant for $1 billion. This acquisition raised eyebrows at the time, as it represented a departure from Buffett's usual preference for acquiring entire companies rather than taking minority stakes. However, Buffett recognized the enduring strength of Coca-Cola's brand, its global reach, and its ability to generate consistent profits. He saw Coca-Cola as a classic moat business, protected by its brand recognition and its vast distribution network. Buffett famously said, "If you gave me $100 billion and said, 'Go beat Coca-Cola from this position,' I'd say, 'I can't do it.'" The Coca-Cola investment proved to be a shrewd move for Berkshire Hathaway. The beverage giant's stock price steadily climbed over the years, generating substantial returns for Berkshire. The Coca-Cola investment also served as a powerful example of Buffett's willingness to adapt his investment approach when presented with a compelling opportunity. Section 8. The enduring legacy of Warren Buffett. Warren Buffett's leadership transformed Berkshire Hathaway from a struggling textile company into a global conglomerate with a market capitalization exceeding hundreds of billions of dollars. His patient and disciplined investing approach, rooted in value investing principles, made him one of the most successful investors of all time. Buffett's influence extends far beyond the walls of Berkshire Hathaway. He became a cultural icon, his annual letters to Berkshire shareholders eagerly anticipated by investors and business leaders worldwide. His folksy wisdom, his simple yet profound investment advice, and his unwavering commitment to ethical business practices earned him admiration and respect from people across the globe. Despite his immense wealth, Buffett remained grounded and committed to philanthropy. He pledged to donate the majority of his fortune to charitable causes, primarily through the Bill and Melinda Gates Foundation. His generosity and his belief in giving back to society inspired countless others to follow in his footsteps. Section 9. Berkshire Hathaway, a timeless blueprint for success. The story of Berkshire Hathaway is a testament to the power of long-term thinking, disciplined investing, and a commitment to building enduring businesses. Warren Buffett's leadership provides timeless lessons for investors and entrepreneurs alike. Berkshire Hathaway's success story demonstrates that it's not always about chasing the latest trends or making risky bets. True success often comes from identifying undervalued opportunities, investing in businesses with strong fundamentals, and having the patience to let those investments grow over time. As Berkshire Hathaway continues to evolve and adapt to the ever-changing business landscape, its legacy as a beacon of value investing and ethical business practices remains firmly intact. The company's story serves as a timeless blueprint for success, inspiring generations of investors and business leaders